U.S. stock market's at a record high, but the U.S. housing market continues with its slump. Economists warning of a potential crash on the horizon. Just got data showing pending home sales ticking up a bit last month, but still lowest levels since the pandemic. Existing home sales, meanwhile, falling to lows not seen since '09, right after the crisis. So let's bring Rick Sharga in for a few minutes here, founder and CEO of the real estate intelligence firm C.J. Patrick. All right, so he keeps seeing these headlines, Rick. Oh, there's a housing crisis looming, I think was the way somebody put it, and looking at these numbers. And again, it's funny because a lot of a conversation on the show today about the stock market at a record. So what's going on here? What should we know?
It's an affordability issue, pure and simple, Connell.
Yeah.
The Atlanta Fed publishes an affordability index every quarter. And if you look at the numbers right now, it's the worst affordability we've had in 20 years, probably the worst we've had since the 1980s when mortgage rates were 18 and 20%. So we need mortgage rates to come down, and we need home price growth to slow down a little bit in order for more people to be able to afford to buy a house.
It's interesting. It was such a big issue, right, in that New York City mayor's race. And, a lot of people are not as comfortable, especially financial types, with the solutions that the guy that won, Mamdani, is proposing. But that's probably why he won. It's just it's so expensive to live here in New York. But it's a national story. It's all around the country.
Well, as a wise man once said, the rent's too damn high.
Yeah, he was good. That was the guy, Jimmy McMillan. He should have won, too,
Yep.
the guy's mayor. That was the guy, yeah. I remember him.
Rents have actually settled down a little bit because we saw about 1 million new apartment units come online in the last 12 to 18 months. Supply is really the key. We need to build more houses. Particularly, we need to build more houses at the entry level. And that's something the government could actually get involved in. They could incent builders to build more affordable homes, more entry-level homes for middle-class buyers. And that's something that a sort of private-public partnership that's been discussed, but really hasn't come to light in recent years.
What about rates? President's all over the Fed chairman, as we know. Lower rates, lower rates. What would you say about rates? I mean, one of the things that's going on, I think a lot of people owning a house would be in a similar situation like that I'm in. You got, why would you leave? I mean, I wouldn't mind moving, to be honest, and we might at some point just because it's the thing to do, for your life. But you got a rate you locked in, and COVID, it's so low, those rates that you locked in, that you're not really incentivized to move right now.
Well, more than 60% of homeowners have a mortgage rate below 6%, and it's actually expensive to move because home prices have gone up, and now you're looking at mortgage rates being higher. So we do need mortgage rates to come down, and until we see a little bit less volatility in national economics right now, we're probably not going to see bond yields go down, and bond yields drive mortgage rates. So we're a couple steps removed from seeing rates come down, but there is hope. A lot of economists are forecasting that rates will be down in the mid to low 6% range by the end of the year. And every time we've seen rates start to tick down even a little bit, we've seen a ton of buying activity. So people are waiting to buy, and they're on the sidelines just waiting for conditions to get a little bit better.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.